Hi, folks. Dan Bird here. Wednesday, September 18th, Fed Day. Lots to talk about. So the Fed raised rates by 50 basis points. I actually didn't think they would do that. I thought it would be 25, but they went for the full 50. And I had mentioned before that I thought if it went 50, then it might spook the market. It was very interesting to see what happened with the market today, which I'm going to show you here in a second. But lots of conversation. I was watching CNBC, a lot of conversation about what this means. It seemed like most people were confused by how the Fed was explaining what they were doing. But we'll see. A few things that I want to show. I also want to continue the conversation I started with Mr. Zuber on Sunday that we couldn't finish because we had some internet connection issues. I'm not sure if it might have been my end. I don't know if it was his end or my end, but at any rate, I'll talk about that today. So let me share my screen real quick and show you what happened today with the Fed meeting. So for those that are interested, my website is breakpointtrading.net, and you can get the free newsletter right in this little box right here. And I also have these trend models, which I'll show you here today as well. For the indexes, for sectors, and for the Magnificent Seven, plus a couple of other stocks, just to give you a sense for how they're moving on a short-term, medium-term, and long-term basis. But first, let's take a look at stock charts. So stock charts is a platform that I use quite a bit. This is what I use to create all the charts that I show. But take a look right here. There's equities. So 2 o'clock, there's the 2 o'clock period right here. Actually, let me turn on my. Okay, so here's the 2 o'clock period right here. And you can see how much volatility there was. Initially at 2, when the Fed announced a half basis point hike, or cut rather, the market took off, and then it came down and went back up and came back down and went back up and finally ended lower for the day. And I'll show you what that means here in a minute. So here's bonds. Bonds were up most of the day, and bonds actually went higher as a result of the Fed meeting. Commodities went lower after 2 o'clock. They sold off considerably. So gold, silver, copper, all of these were lower on the day. Crypto, pretty much kind of static for most of the day. Crypto didn't affect them too much. But bonds looked like it was heading up, and equities looked like it was heading down by the time we ended the day. So let's take a look at a couple of charts here that I already put up here. And these charts are on my website on the charts page, the very top of the page. These are the 10-minute charts, which includes the sectors, aggressive and defensive sectors. So the first one is the S&P. This red line is from Monday's open. So you can see how it's done all week. Pretty much went up and down and basically just sitting right on that support line. And the vertical blue line I put here is the Fed meeting. So that's 2 o'clock, that vertical line. So you can see what happened. Again, the market went up and then it ended lower, ended right on the support line. So it's going to be really interesting to see what happens tomorrow. Tomorrow, we get the actual reaction to the Fed meeting. So it's not always so much what the Fed does, it's the reaction the market has to what the Fed does. And you can see the aggressive sectors down here. Here's technology, actually hung in there, sold off a little bit after the meeting. Financials kind of went sideways, up a little bit. Discretionary first went up and then came back down. Communication services started going up, and industrials just went sideways, but industrials actually did pretty well the last couple of days. Now let's look at the defensive sectors. Same thing up here. This is the S&P. Healthcare has been selling off all week. Had a little bit of a bounce with the Fed meeting. Staples, which is a defensive sector, again, sold off and then started coming back, kind of the opposite of what the aggressive sectors did, technology in particular. Energy actually has been looking pretty good here recently. Just this week, in fact, energy is starting to pick up. Utilities, the most defensive sector, sold off right after the meeting. This is also a very interest rate sensitive group. So they might actually pull back up starting tomorrow. Tomorrow's going to be very interesting. And then materials and the S&P versus the S&P down here. All these charts here are relative to the S&P, by the way. So it's not so much what healthcare did on its own. It's how did it do versus the rest of the S&P. The materials is where gold and silver reside, and that was kind of flat. So let's go take a look at what actually happened with the S&P and NASDAQ. Right here on the home page, the S&P, you can see right here, this was the high. It actually went up, and yesterday, very briefly, printed a new all-time high. And today, again, printed another new all-time high. However, that candle right there is a shooting star candle. And one of the things that I said last week or the week before was what I've learned through experience is anytime I see a shooting star, especially when it's at the top of a trend, I don't ask any questions. I just sell and get out. And that's pretty much what I did. I was watching it right up until the close, and it looked like it was trying to go back up again. But right at the close, right near the close, last half hour, basically, it sold off pretty heavily. And you can see that right here. So this is a 10-minute chart. So each of these bars are 10 minutes. So these three red ones here is the last 30 minutes of the open of the market today. So we'll see if it breaks through this support level and if this downtrend continues tomorrow. I don't know what it's going to do, but since we're going into options expiration on Friday, and since we are, as of yesterday, started not only are we in the worst month of the year, the next 2 weeks are the worst 2 weeks of the worst month of the year. So all of those things are working against the market. Based on that, I think it's probably the likelihood of a sell-off is probably higher than a rally, especially when we look at what this looks like right here with this shooting star candle right there. It looks like it's probably going to go down, maybe down here to the 5550, 5500 area, somewhere down there. We'll find out tomorrow. If we look at the NASDAQ, it's kind of the same thing, although the NASDAQ has had this downtrend line, while the S&P and the Dow both actually went to new highs. The NASDAQ has not. So the tech-heavy NASDAQ, the aggressive index, trying to get through this downtrend line, did it early on today, but ended again with a shooting star candle right above the 50-day moving average. Very likely it's going to go down here and test this uptrend line. So that's a symmetrical triangle, and it will break out significantly. If it does break out to the upside, it will go back up to the highs here. If it breaks to the downside, it will go back to the lows down here. But because it's symmetrical, you don't know which way it's going to go. But it looks to me, based on some of the momentum indicators, looks to me like it probably will head down. If we look at the Dow Jones, now the Dow is sitting, it also has a shooting star candle, so that's not a good thing. And it's right at the top of its trend, basically. So it's been making new highs as well. But maybe time for this one to take a break. I think the whole market really probably needs to take a break right now. If I go over to my portfolios page, and this is the market timing strategy, using these two, this is the total market index right here, TMI, on a weekly basis. You can see on a weekly basis, it came down. These are weekly bars. So back here in August, we had a sell-off. It went below the 21 week moving average right here, but then bounced right back, came down, hit it, and bounced up again, and it's still above it, so that's positive. So on a weekly long-term basis, it actually is still in an uptrend. I'm going to talk about this little cloud that you see down here in just a second. This is what I wanted to talk about on Sunday, but I'll explain what that is in a minute. And if you look at the daily for the total market, now the total market index is made up of all of these things here. The Dow, the NASDAQ, the S&P, Russell 2000, plus 3,800 other stocks. So it truly is a very broad index. So we look at the daily, the daily chart, same thing. It broke through the downtrend line right here, actually broke through yesterday, went up and made a new all-time high, but came right back down and closed below it. If we look at that with the actual candles, you'll see that, again, it is a shooting star candle. So those typically are reversal candles, and most likely it will continue to move down. We'll see. That doesn't mean it has to, but that's what it looks like to me is going to happen. The other thing is this right here. If the market is going up, then the bullish, these are the double and triple leveraged bullish for the NASDAQ and for the S&P. And these are the inverse or the bearish double and triple for the NASDAQ and the S&P down here. And in each one of these, you can click on it to actually see what it's doing. Now, this actually, last week, this gave it wasn't cash, it was a up signal. However, as of today, and we can click right here on the triple, which I was actually in, and you can see right here, the market had been going higher. This was the up signal right here. When it broke, it closed above the 21-day moving average. And these indicators are right on this chart when you click on it. And it was trying to get through this cloud, which I'll explain what that is in a minute. And it actually closed above it, closed above the 21. But again, today ended up with a shooting star. So because of that, I actually moved my stop up. I had my stop down here. Initially, I moved it up right to break even, just in case the market reversed. And it was above it for most of the day, but right at the end, it did reverse. And so I got stopped out, but with no loss. So I was even on this trade, but it wasn't a very long trade. And this was very risky anyway. It was an up signal, but it was risky because of where we are in the seasonality with the market, September typically being a bad month for the market. However, it did have an up signal, so I decided to give it a shot. But now everything's in cash. So that's where we are. Okay, so the last thing I want to talk about is those clouds that I was showing you. And I'm going to go over here to the trend model. Let me look at indexes. And what I did was I actually put in here how to use the cloud. It's called the Ichimoku Cloud. And the reason I did this is I was trying to figure out a way, even though this gives a short-term, medium-term, and long-term up signal, you can see right here, the Russell has a short-term up signal as of 2 days ago. If we look at that, you can see the up signal right there, and it's actually done pretty well. Pulled back today, just like everything else, however. But what I was trying to do is, you can see a lot of times when you have short-term signals, here's a down, here's an up, here's a down, in between these medium term, the medium terms are the blue ones. I was trying to figure out how do I keep from getting stopped out or too much choppiness during that period. Or another way to talk about it is, if I'm in something, how do I know when I want to add? When do I buy the dip? Everybody says buy the dip, but how do you know when to buy the dip? So that's why I created this. And the reason that I did it is because I subscribe to Katie Stockton's newsletter. And every so often she puts out a recommendation. In this case, it's for Hanover Insurance. And I notice she always uses this cloud. So I was wondering, what the significance for her, why is it so important for her? In this case, it's a weekly, this is a weekly chart. So I decided to study it and understand what this really is used for. And that's what I put right up here. So to help you understand and learn how that cloud works and even understand how Katie Stockton trades, this here explains the whole thing. So it's basically a lot of this is right from stock charts. So I referenced Katie Stockton here. And I explain how this whole thing works and how you would use it. It basically will identify trends and support and resistance. So if we look at it, and I put a number of charts in here, I started adding additional indicators to it. But if we just look at the cloud up here, in this case, this is the Qs. In fact, this is recent. This is very recent. This is current, basically. So this is from a few days ago. And I have the daily chart on the left and the weekly on the right. Now, the weekly is the one that Katie was using that I showed you before. And what you'll notice is when there is a reversal, when it's above the cloud, the trend is up. When it's below the cloud, the trend is down. When it's in the cloud, that means it's a sideways movement. So the way that you can use it, especially if you're a long-term trader, if it's below the cloud, then don't buy the rallies. When this starts to rally, that's not the time to buy the dip because it's below the trend. You can short those rallies if you want to play the short side, but don't buy the rally if it's below the cloud. However, if it's above the cloud, it means the trend is up. When it pulls back, like it did here in July of last year, actually this is 22, it's a weekly chart. Because it's above the cloud, then you can look for entries either to add to your position or to open a new position. And then it trades up and it pulls back again, still above the cloud. So that's the way that it should be used. And then if you add and it basically helps you identify trend and support resistance. So when it comes back to the cloud, this may be support. You can see it bounced there, but then it broke through it. Came back up, but didn't get through it. So again, that's a shorting opportunity. That's not a time to start adding. Came back down, and now this time it did come through. But if you add other indicators to it, like moving averages, so now you can see here the short-term and medium-term signals. And you can see here there were 3 short-term signals, but the price was below the cloud. So you would just simply ignore those. And especially with a medium-term signal that went below the cloud right there, you would ignore all of these signals if you wanted to be long because it's below the cloud. So now I've added moving averages into that. I then also added the MACD or the PPO, and whenever it goes below 0, then that confirms a downtrend, and above 0 confirms an uptrend. So again, if we look at the same short-term signals right here, it is not above the cloud. So even though this went above the 0 line here, we ignore all of those signals because we are still below the cloud. And I'm finding that this is a really great way to just confirm what you're doing. If we look at this on a weekly, again, this is the Qs. On a weekly, it went below 0 right there, and this was the down signal. It went below the cloud. So none of this, if you wanted to be long, you would just ignore all of this down here. And the MACD is below 0 here as well. Now it went above right there, so it gave you your first warning that maybe it's going to start to come above the cloud. You've got a medium-term up signal right there, and then it finally broke out right here. And even though it pulled back, just like I showed before, even though it pulled back in these 3 situations, the MACD never went below 0 up here. So this just confirms that it's still in an uptrend. And then finally, I add in the force indicator down here. It explains what that is on a daily. So it's moves much more quickly. Again, you can see all the choppiness through here. But because it's below the cloud, you would just ignore all of this. Ignore all of this. On the long term, however, in this case right here, same as the one above, where we added in the MACD, same thing down here. Now this actually does give you pretty good confirmation. This is the down signal, and this one is the up signal right here. So that up signal was there. This up signal was back here. So in both of those cases, it finally did. You could wait, make sure it's above the cloud. But once it gets above the cloud, then you want to look for opportunities to add, and that's buy the dip. That's where you buy the dip. So that's one of the things that I've added, and one of the things now on everything on the trend models, I have a zoom in feature that shows the daily chart and a zoom out feature that shows the weekly chart, so short term, long term. And if we look at, for instance, Meta on a short term, you can see right here, it's short term up, medium term up, long term up, all the way back to March of 23. If we look at the zoomed in one, now we have the cloud down here too, and we can see that it is above the cloud on the daily chart. So this is an opportunity whenever it pulls back, you want to wait to make sure it doesn't drop through, but on the first green bar, which also happens to be the short-term up signal right there, that's where you would add or take a position. In the same way, if I look at Meta on a long term, it gives you a much longer term view, and now it crossed over right there. We've got two bullish signals right there, the crossover right there. So with those three signals, you could get in right there and you would still be in. It's still above the cloud. There's no indication yet to sell Meta in this case. And the MACD you can see up here is still above zero. So for long-term traders and people that want to be in it for a much longer period, you have to be more patient because you have to wait for these kinds of signals. If you want to get in the middle of the trend, then you can use the short-term signal and wait for above the cloud for an opportunity. So right here, that was an opportunity right there, one above the cloud with an up signal. So that's the way to use it. And what you can see, if we look at NVIDIA, that on a long-term basis, you can see it, same kind of thing, same as Meta. Way back here in the beginning of 23, when the bull really started, it went up, it came back a few times, but bounced right there on the 21-day moving average. Still above the cloud. So, and MACD is still above zero. So still an opportunity, but you might want to wait for a pullback, which we may be getting here shortly, and look at it on the short term. And you can see now it actually is below the cloud. It's actually right in the cloud, which implies that it may just move sideways, but it could very easily drop back through. So it's not time to add to NVIDIA right now. This is very similar to what happened with the Qs. So there was an up signal right there, but then it pulled right back. And today it gave a red bar. So it's pulling back down again. So that's the way to use those. I found it a really good way to just identify what the trend looks like. If we look at Oracle right there, this is the same thing back in actually before 23 started. There's the crossover right there. So it's above the cloud. Right here, it gave a down signal. It's above the cloud, so you can look to add in through here. Actually went right to the cloud and then bounced back up. All of these situations right here are opportunities to add to Oracle. And now it's really just taken off. If we look at that on a short-term basis, you can see how well Oracle has performed. It went above the cloud right here. So that would be the time to get in if it's in the middle of that long-term trend. And then right here, it went below, so you could either get out and back in again. But right now, it's well above the cloud. So this is probably not a good time to add yet. But on a pullback, as long as it stays above this, then that's a good time to add to Oracle. So that's what I wanted to explain last Sunday, something that I've added just to help either stay in a trend for the long term or figure out when to get in or figure out where to add. In other words, buy the dip. So that's hope that was helpful. Other things on the charts page that we can look at, the inverted yield curve is still uninverted. So it's continuing to move higher. So while that seems to be a good thing, it also implies that there may be a recession coming. And a lot of talk today about whether a recession is coming or not. And the overall consensus that I saw was it's either not, we're probably not going to have one, or we're going to have a soft landing. So far, that looks like that might be the case. But interestingly, a lot of folks also said that the CPI, the inflation rate, is going to go down below 2 and probably stay below 2 for quite a while, which is something we talked about last Sunday. So that's it for today. We'll see what happens tomorrow. Tomorrow's going to be really important. Tomorrow is the confirmation of the Fed meeting for today. And since we are now starting into the worst 2 weeks of the worst month of the year, and we have options expiration coming up on Friday, I would not be surprised to see the market continue to sell off and maybe sell off now into October. I thought we might have a reprieve from that September-October sell-off with CPI last week, which did give us a little bit of a bounce. And then the Fed meeting today, which started off looking good, but then ended not looking good at all. So good luck trading. Hope everyone's doing well, and I will talk to you on Sunday. Bye.